going on, YouTube family? Welcome back to my YouTube channel. If you guys are new here, my name is JulietteRobelo and I'm a realtor and investor here in Orange County, California. Just a few months ago, I was where many of you guys might be right now. Now, trading is how I pay most of my bills now. And most importantly, it's how I've officially broken free from the traditional 9-to-5 job. Now let's be real, this isn't a get-rich-quick story. Trading is work. I'm up at 5 a.m. reading the news, tracking global trends, and analyzing earnings reports. There are frustrating days, there's trades that don't work out, and stocks that don't move as they should. But here's the thing, guys. I'd rather take on that risk and that pressure because at least it's mine. My success, my mistakes, and my responsibility. And what I've come to love the most about trading is that it keeps me sharp. It forces me to understand the world, politics, psychology, history, economics. It's all connected. Every trade is a test of what I've learned and what I haven't. And that's exactly why I created this channel. Not because I'm an expert, because I'm not. But talking through ideas helps me learn. And my hope is that this space becomes a kind of community where we can think critically, ask good questions, and grow into smarter, more independent investors. Okay, so let's get into it. In today's video, we're covering the beef between the Fed Chair Jerome Powell and President Donald Trump, my take on Tesla's upcoming earnings, and growth stocks I'm watching closely. If that sounds like your kind of vibe, hit subscribe and let's get started. Okay, so let's talk about last week's news and how it shook up the stock market. Jerome Powell, the chair of the Federal Reserve, gave a speech that hit the markets like a gut punch. Here's what he said, in summary. The economy is slowing down compared to last year. Yes, consumer spending picked up this quarter, but that might just be because people are trying to stock up before tariffs hit. People are getting cautious with their money. The ongoing trade war is making everything uncertain. And the big one, the tariffs announced on Liberation Day are larger than anticipated and will probably lead to higher inflation and slower growth. As Powell said those words, you could literally watch the market sink lower and lower. But the real headline, the line that infuriated the president, was this. Powell made it crystal clear that the Fed would not be cutting interest rates right now. And that is where the clash begins. The president wants those rates lowered because lower interest rates would stimulate the economy. And it is true, lower interest rates could boost economic growth and get people to feel better about spending. But Powell isn't cooperating. In fact, the president wants to fire Mr. Powell.
Do you believe you have the power to remove him? And are you trying to do that?
I don't think he's doing the job. He's too late, always too late, a little slow, and I'm not happy with him. I let him know it, and if I want him out, he'll be out of there real fast, believe me.
We'll get into that drama in a second, but let's pause for a moment. Do we understand why the Fed is resisting pressure to lower rates? Here's a simple way to think about it. Okay, so picture this. You walk into a car dealership and they're offering 0% interest loans. Sounds like a steal, right? But then everyone finds out and suddenly there's increased demand for these cars because who wouldn't want a new car that they can pay off over 5 years at 0 interest? So then the dealership starts running out of cars. So what do? They raise the price. But here's the thing. If people are flooding in to take advantage of cheap loans, but there aren't enough cars to go around, the dealership can get away with charging more. They might make 0 on interest, but they'll increase the sticker price to make up for it. That's inflation. Now, big picture. When the Fed cuts interest rates, borrowing gets cheaper for everything. Homes, credit cards, business loans, you name it. People spend more, companies borrow more, and the economy feels like it's thriving. That's the debt trap, and that's the fake economy that it creates. When borrowing is this easy, people take out more loans. That means bigger mortgages, maxed out credit cards, more stuff. It feels like growth, but it's really just debt-fueled spending. Lower interest rates lead to more borrowing, which leads to more spending, which leads to higher demand, which leads to higher prices. That's what I call a fake economy. It's not built on value or productivity, it's built on the illusion of affordability. Eventually, this manner of spending catches up when people fall behind on their payments, then you start to have a financial mess that looks like what happened in 2008, when people were overwhelmed with debt they couldn't keep up with. That's the tightrope that Powell's walking. He knows low rates can give the economy a boost, but it could also result in more debt and worsening inflation. You see, Powell's job isn't about politics. It's about preventing disaster. Now, here's where this economic debate turns into a dangerous power play. President Trump isn't just disagreeing with Powell, he's threatening to fire the Fed chair. This wouldn't just shake up Washington, it would break the Fed's independence. You see, the Federal Reserve wasn't designed to take orders from the White House. Its whole purpose is to make cold, hard, data-driven decisions about interest rates without worrying about elections, polls, or political agendas. President Trump wants more than input. He wants control over monetary policy so he can demand lower interest rates, which might stimulate the economy, but comes with real risks. Imagine if interest rates swung based on who was in power. Businesses wouldn't know where to invest, markets would panic at every tweet, and inflation could spiral because short-term political wins would destroy long-term economic stability. That's why the Fed's independence isn't just some bureaucratic formality. Here's the bottom line. This isn't about Powell versus Trump. It's about whether monetary policy stays with economists or gets handed over to politicians. Think about that. Okay, so let's talk about my play for next week, Tesla. So on Tuesday, April 22nd, Tesla reports its earnings. And with a stock strong like Tesla, people are gonna get into it because they don't wanna miss out. So I'm gonna day trade it. But in day trading it, I need to anticipate its volatility and be prepared to ride the stock down and up because it's easy to make both a positive and negative case for Tesla's $700 billion market capitalization. Let's start with the negative. So if you saw my last video on Tesla, I'll put it right here. You know about Elon Musk's tendency to delay or fail to deliver on his promises. Quick refresher. He promised full self-driving capability by 2017. Did he deliver? No. He promised robo-taxis by 2020. Did he deliver? No. He promised a fully functional humanoid robot prototype by 2022. Did he deliver? No. How long can you continue to promise these things and not deliver? Also, this period is different because last earnings period, we didn't have Doge and all of this I hate Elon stuff going on. The brand is hurt. Earlier this year, nearly every Tesla Cybertruck in America was recalled because the panels on the exterior body of the truck were falling off due to glue problems. Even before the tariffs came along, BYD was giving Tesla a run for its money. So much so that even though you can't buy BYD in the US, BYD's sales outperformed Tesla. And they're outpacing Tesla in technology because in March of this year, BYD unveiled a charging system that can replenish an EV battery in 5 minutes, half the time of Tesla's charging system. Some are calling it the car industry's DeepSeek moment. As for future sales, well, 20% of Tesla's sales come from China. And now, with the recent tariffs, the Chinese are turning to their homegrown rival, BYD. Here's the thing about Tesla though. Bleak sales don't scare investors. That's because Tesla's valuation isn't based on what the company has done, it's based on its future potential. Most car companies are valued based on how many cars they can assemble and how many that they could sell. But Tesla's different because it's priced more like a tech company. Investors aren't just looking at EV sales, they're betting on faith-fueled valuation. Full self-driving becoming the norm, the energy division exploding, robots like Optimus changing how we manufacture, and AI breakthroughs that reach beyond cars. Investors are basically saying, we're not buying the Tesla of 2025, we're buying the Tesla of 2030. But here's the catch. That kind of valuation only holds if you believe Elon can pull off his vision faster than the competition catches up. And with China's EVs rising and autonomous driving still in test mode, that bet is getting harder to justify. Finally, Elon is what's called a key man, because what happens if Elon Musk disappears? It's the man they love, not necessarily the company. If he ever left, that stock may become worthless. Okay, maybe not worthless, but a sharp decline. And we're seeing Elon spread himself thin between managing Tesla, SpaceX, and of course the Doge. With Elon running the nation and rescuing astronauts, who is actually running Tesla? Our key man is distracted. Okay, so that's my list of downsides. Now let's look at the upside. So Tesla is a cult stock. Fundamentals don't really matter here. And what I mean by this is that Tesla's share price is propelled by optimism, even when their financials are lagging. It's a stock of faith. Also, everybody wants to be in it for fear of missing out. And that's what makes it among the most traded stock in the world. Tesla isn't limiting itself to just cars anymore. It's an innovation company. Think less Toyota and more Apple or Nvidia. Elon Musk isn't just chasing auto sales. He's betting Tesla can dominate personal transportation, energy, robotics, and even AI and healthcare. The goal? Nothing less than being the world's most valuable company. And Tesla bulls are buying into this vision. Today, Tesla's stock isn't just about EVs, which, let's be honest, have slim margins. It's about the software ecosystem with all sorts of connected services like autonomous driving, maps, robotaxis, over-the-air updates, and entertainment. Pretty much all the features that turn a car into a tech geek's ultimate toy. Yes, much of these technologies have yet to be delivered, but we know we can't sleep on Elon because there's evidence to believe him. He is, after all, involved with successful missions to space with SpaceX. He was involved with ChatGPT before his fallout with Sam Altman. So despite underwhelming results, you can't discount what he has accomplished and what he's associated with. Investing in Tesla is a bet on his genius for turning the future into dollars. Okay, so my list of negatives outweighs my list of positives, but I still wouldn't bet against Tesla. At least not totally. Here's why. This wouldn't be the first time that Tesla shows up to its earnings with less than underwhelming results. But Elon has a way of getting its bulls to rally around hope and the future. I'm anticipating that Elon will come with some major event like the promise of robotaxis in July or human-like robots by 2026. But I had to balance that with maybe this time is different because how many times can you promise robotaxis and fully functional humanoid robots and yet not deliver them? So based on all these factors, that's how I'm approaching Tesla's earnings on Tuesday. So on Tuesday morning and throughout the day, I'm planning to ride Tesla up, only if I see it going up. But I'm gonna sell it before the market closes on 1 p.m. Tuesday PST so I don't get burned at the earnings call. Then the following day, I'll either short or go long depending on which direction the bulls or bears take it. Okay, so let's talk about this week's stock picks. The drone revolution. Okay, so what does the stock market really reflect? In many ways, it mirrors where we are as a society. In the 1990s, it was the internet. In the 2020s, it's AI. And now we're looking at a new kind of revolution for a new kind of future, which leads me to drones. So what started as a niche military tech and something for gadget enthusiasts has exploded into something bigger. We rely on drones to deliver medical supplies and save lives. We use it to monitor climate change and for military defense. It's no longer just boots on the ground, it's drones in the sky, AI-guided strikes, and autonomous surveillance. More fascinating is that the same technology protecting soldiers overseas might one day deliver your Amazon packages. That's the drone paradox. It's both ordinary and extraordinary at once. And so we invest accordingly. Okay, so here's a couple companies that I have my eyes on. First up, AeroVironment. AV. So they build small, tactical drones used by the US military, real-world battlefield-ready tech. This is your right now drone stock. So next up is Archer Aviation, ACHR. This one's future forward. Archer is building electric flying taxis and already has deals with United Airlines. It's risky, it's bold, but the upside is massive if it lands. Okay guys, so this week I learned that the market is like a jigsaw puzzle. Powell's moves, Tesla's drama, drone wars, tariffs, separate pieces that actually fit together. And your edge is seeing the connections before others do. Thank you guys so much for watching, and if you enjoyed this video, as always, be sure to like, comment, and subscribe. I would love to hear your thoughts below. And until next time, stay smart, be curious, and build wealth. I will see you guys next Sunday. Bye.